the gatekeepers, the power brokers, the finance system always had the advantage over us. The Web3 companies, they took our data and monetized it. And here it's been given to us. It's like the internet's been given to us and we've got tokens to make us rich out of it. It's like that's what's happening, and we're broadening this wealth. I mean, we're only a $3.5 trillion asset today. I think we're going to 100 trillion in 10 years. So we're only 3.5% of the way along the journey. This is the biggest, largest redistribution of wealth in all history. It's underway. So I think, probabilistically speaking, a lot of people are going to get out like I did in 2013 in that March-April period, because we probably get a ramp up into that, because that's how the cycle evolves. And then a lot of people will get out. The market falls, it's tax season, people have to sell some stuff. And then if it ramps up because of this new government and all the things going on, and then it ramps into the end of the year, everyone's going to be caught off sides and they'll be panicking back in. And this is where you make mistakes, right? All of this is where you make mistakes. So it feels and looks to me much more like a repeat of 2017 that we're about to set up for.
Raoul Pal kicked things off with a deep dive into where we might be in the current market cycle. He emphasized that while fear and hesitation are common, especially for those who've experienced the harsh corrections of past cycles like 2017 and 2021, it's essential to approach the crypto market with a clear, long-term perspective. Raoul touched on the importance of understanding liquidity, cycles, and the psychology of the market. He believes we're nowhere near the top, comparing the current setup to a repeat of 2017. His advice? Think in multiple year horizons, avoid overtrading, and focus on fundamentals like Bitcoin and Ethereum. Are you holding strong, or do past cycles have you second-guessing? Please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. You can also explore our other videos on cryptocurrencies and the overall digital asset space. Drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and greatly supports the channel's growth. Thank you, and enjoy the video.
Okay, the issue being, it depends what kind of crypto birth year you're from, right?
17.
You're class of 17, right? So what happened, most class of 17 people, is they got utterly fucked by 2021 because that last leg was short, right? Everyone thought, right, here we go, then the final big blow off, and it didn't happen. Anybody who was 2013, they got 13 and 17, and then they'd made enough money that didn't really matter by 2021. They sorted their shit out. So people have a huge amount of PTSD, massive. And that is influencing people to want to sell early. Because they're like, I'm not going to round trip this again. I'm not going to round trip this again. So I think, probabilistically speaking, a lot of people are going to get out like I did in 2013 in that March-April period. Because we probably get a ramp up into that, because that's how the cycle evolves. And then a lot of people will get out. The market falls, it's tax season, people have to sell some stuff. And then if it ramps up because of this new government and all the things going on, and then it ramps into the end of the year, everyone's going to be caught off sides and they'll be panicking back in. And this is where you make mistakes, right? All of this is where you make mistakes. So it feels and looks to me much more like a repeat of 2017 that we're about to set up for. Now, I could be wrong. I don't think I'll change my stance. I'll take some lifestyle chips off in the first quarter. But, you know, the way to make real money in this is to stay in. And in the bear market, buy more. Mm-hmm. It's like, you know, Jeff Bezos doesn't trade around his fucking stock. I mean, I was in Silicon Valley hanging out with a mate of mine, and he was he bought Bitcoin at $3 and bought a lot of it. It's worth billions of dollars. I'm like, do you trade it? It's like, no. Do
why would I do that?
Why would I do that? But we've got this head, the cycle. Oh my God, my cycle, because we've got this PTSD. So anyway, it's all going to come down to liquidity, because liquidity is the dominant factor. What was unusual about 2021 was liquidity peaked early, because they jammed it in 2020 and then they started taking it out. And it peaked in March. Normally, liquidity peaks in August, September, October, November, which is why the cycles are longer. So that's all I think we need to know is when does the business cycle peak? That's the other thing. I use the ISM survey. When that peaks, the market usually peaks around that. We haven't even got off the bottom yet. So we're still, the ISM is below 50, which means most of the economy is still not even really functioning yet. So we're a long way from this. But I understand people have PTSD, which is like the best answer for that is take some lifestyle chips off on the journey, but don't trade your whole bag and try and think in multiple year time horizons. Think about this 2030 time horizon. Say, listen, I've got to be in the technology. I'm going to have drawdowns. I'm not going to do stupid shit. I'm not going to be 100% in meme coins at the end of the cycle. You know, that whole don't fuck this up thesis. Just be sensible. Everyone will be fine. And if it does have a massive blow-off cycle, sure, you can take some more off. But, you know, I just don't think trade the cycle.
Like, just one final one. Because there is such a high amount of new coins that are coming onto the market, so much kind of emerging tech that hasn't really been battle tested, hasn't been through like prior cycles. Is there any merit in the whole holding through multiple cycles? Is what assets would you put in that category that you'd feel comfortable doing that with? Because for me, there's probably 3: Bitcoin, Solana, and ETH. That's about it.
Correct. And if you're really just going to reduce risk and hold, just Bitcoin.
Yeah.
Or ETH plus staking yield, you know.
Yeah.
But don't fuck around with this other stuff. Your chosen token, this is going to be the one. Probably isn't. The easiest trade is the second cycle trade. The Solana this time around, has it done well? You know, is the community still there? Does the price start performing in outright terms, and then versus ETH and Bitcoin? Yeah, that's the trade. The trade is not to be brave in the bear market and hold the riskiest stuff all the way down. Because it goes down 99.9% half the time. I mean, Solana did. I mean, Solana was
$8 Solana was a bit scary.
97.5%.
Yeah.
We all went through that. That was a hell of a drawdown, and it still worked. If we think about one of the biggest complaints that we've had is like the gatekeepers, the power brokers, the finance system always had the advantage over us. The Web3 companies, they took our data and monetized it. And here it's been given to us. It's like the internet's been given to us and we've got tokens to make us rich out of it. It's like that's what's happening, and we're broadening this wealth. I mean, we're only a $3.5 trillion asset today. I think we're going to 100 trillion in 10 years. So we're only 3.5% of the way along the journey. This is the biggest, largest redistribution of wealth in all history. It's underway.
Do you think, so with the kind of, I suppose, fractals of previous cycles of time gone by, do you think, like, let's say this cycle, if you'd been buying Solana at $8, you've played a blinder, probably a trade of you don't really need to do anything else. You've done your job. Obviously, you might be slightly biased with the SUI trade, but what I'm kind of seeing personally, completely don't hold any SUI. People are coming in and thinking, well, where's the next Solana? Sure. Where's the catch up trade? And that's why you kind of see these weird psychological fractals get played out on the chart. Is there anything you can kind of expand on based on that?
Well, don't forget the fractal is actually driven by the debasement cycle, the everything code cycle. So there's already a fractal that's in place. So then what we're saying is, do people do the same thing every cycle? Yeah, we're humans. We just do the same thing, which is like, okay, well, Solana's gone up a lot. What's next? But also the funding cycle of these massive blockchains means that in 2022, 2023, SUI, Celestia, a bunch of these guys raise a lot of capital. They're serious projects, so then they get developers and they do all of their kind of groundwork, building community, all of that. And then what you see is success or initial signs of success. They're still early. So you don't know, but the initial signs of success. And that's what builds momentum, because the more activity on chain, the more the value of the chain goes up. So it's all driven by something called Metcalfe's law. Metcalfe's law has had a value in network. And it's basically the number of users on the network and the total value transacted on the network. So some networks are lopsided. Doge is the most lopsided network of all, right? There's no on-chain activity. Nothing is built on it yet. Maybe X will be. But really, it's like there's a shit ton of holders. So that has this really weird, skewed Metcalfe's law valuation, but it works. Others, like ETH, have both. Bitcoin has a ton of value transacted because it's a very valuable network. So I look for that and look for that, what goes on. It seems that people do that because it gets attention. If some activity is happening, we're just attention monkeys, and where attention flows, money flows.
Does what a lot of people probably do in the second cycle, like the first cycle, you don't have a fucking clue what you're doing. You just throw shit at the wall and it goes up and you're a genius, and then you round trip. Second cycle, you kind of, right, I'm not going to do that again. But then I think people overthink it. So they get into this kind of position where they mid-curve absolutely everything. And still probably round trip a little bit of it, to be honest. And then they buy positions that they've convinced themselves are like good technology. And it should go up based on this thesis and this narrative. Does a narrative precede price, or does price precede narrative for the most part in this space? And does that carry over to any other market as well?
Look, narrative is massive in this, and if everybody says this is a great project, it becomes a great project. It's kind of weird, but I found that price, if I kind of impute the maths behind Metcalfe's law, price is actually pretty accurate. But if you think of narrative, if people say, oh, whiff is the next thing, you get a bunch of attention, which brings a bunch of active users. So that drives the value up. So it's always that balance between the two. I don't know what leads what, but there's this kind of flywheel effect. And once you've got a flywheel working, okay, that's a very big deal. You know, we saw the flywheel of ETH last cycle. I mean, it just attracted so much capital because you could do so much on it. And we had two breakthroughs, which was three stablecoins, DeFi, and NFTs. I mean, you can't ask for more. Solana, its breakthrough has been meme coins. There will be a bunch of other use cases. I mean, it's just very nice and efficient and quick to use. So you need some of those breakthroughs as well, because what they do is capture attention, then more people build on them. The foundations all give out capital to spin this flywheel, more and more people build, and it works.
Wow, what a brilliant breakdown of the crypto ecosystem. The concept of Metcalfe's law driving network value and the psychological cycles of humans in the market really hits home. It's fascinating to think about the massive redistribution of wealth happening right now and how projects like ETH and Solana keep innovating to capture attention. Truly inspiring insights into the future of Web3. Thanks for tuning in. If you found this video insightful, don't forget to like, share, and subscribe to the channel for more deep dives into crypto, finance, and beyond. Drop your thoughts in the comments. What's your long-term bet in this evolving market? Until next time, keep exploring and stay curious.